Hey, good morning and welcome back to our weekly life webinar. Let me get started over here first. And there we go. Sorry. All right, here we go. Welcome back to our weekly live webinar, guys. Very excited to have Mutual of Omaha on with us today. I'm going to talk in depth about some of their UL stuff, IUL stuff, UL stuff, universal life. We'll just keep it simple as that. So very excited to have these guys on and go in depth about this. Of course, if you're not with Mutual of Omaha, give me a call. Of course, we'll reach out after this as well. But if you have any questions, don't forget to enter them in the box. Super excited. Like I said again, Mutual of Omaha, Mr. Kurt, we're going to let you take it away.
Awesome, Brent. Appreciate that. Guys, as always, super excited to work with Eldercare, especially what you guys do out in the field. Just quick background on me for those of you who may not know me. I've been in this industry pushing 30 years. I was a producer myself for 18. So I have been in your shoes. I remember driving from where I'm at here in Omaha to Des Moines to about 2 hours away to drop off a policy that got me $15. So been in your shoes, and Cindy's been in this just as long as I have. She's the account executive that works with you guys. Her and I are your sales team. We're here to support what you do. So again, I appreciate it. What we're going to do today, guys, is we're going to get into IUL Express. Now, let me go ahead and share my screen here. Oh, I got to do this. Yeah, you got to give me permission to share.
There we go.
Nobody.
Allow.
All right, I want that one. So let me know if you can see that okay. Um,
I can see it.
all right, cool. So that's a little bit about me. And again, I've been around for a while. So again, think of Cindy and I as your sales team, but I'm talking about IUL Express today. There's a lot of misinformation out there, a lot of it. And if you want to be surprised as to the amount of misinformation, go hop on TikTok and just screw around there for all of 5 minutes. Don't do any more than that because that thing will suck you in there and your life will be gone for 3 hours. So go hop on there, just look, and you'll see some just insane misinformation. It's so bad because people view it as a financial instrument, which it is, but they also view it as some type of serious investment, which it is not. It is life insurance at its core. So I want to be crystal clear on that. That's exactly what this is. So does it have a lot of cool bells and whistles that you can do a lot of different things with? Yeah, all day. And we'll get into that. But keep in mind what it is and what it isn't. All right. Mutual of Omaha, guys, look, you know us, man, just as important, your clients know us. Been around since 1909, right? It's 115, pushing 116 years. When you talk about IULs or any other product, right? If you bring up Mutual of Omaha into the mix, in general, your clients are going to have a positive reaction to us. They know us. There's a level of trust built there over more than a century. Utilize that when you're talking to them, right? Especially if you're new in the industry. If you're relatively new in the industry, hey, just started my own business in the financial services industry. I partner with some great carriers like Mutual of Omaha. What have you heard about them? Right? That's a great thing for you. That allows you to lean on the work that we've done over the years. So that's important for you. Here's the other cool thing. You guys have insanely talented leadership at Eldercare, without a doubt. Cindy and I are an extension of that. We are your dedicated team. I have a group of people on my sales support staff that are here to help you every step of the way. So if there are things you need, you got questions on product, you got questions on, hey, I'm thinking of doing this with a client, or I'm thinking of presenting this and I'm not sure how to go about it, by all means, utilize your management. You'll get my contact information and Cindy's contact information at the end of this. I want you guys to understand that you have access to us. Um, Competitive simplified issue portfolio. Yeah, bar none. I would stack us up against anybody. We've been in the simplified issue game. We were the first to have a simplified issue IUL, and I would stack our IULs up against anybody, regardless of who they are. If you go into it and you actually look at what the core cost of insurance is, because that's a critical component to any IUL, what you'll find is we're more competitive than most, which allows the different functions of an IUL to work even better. Fast and simple underwriting guide. Simplified issue. We have 4 core life products and an accidental death products that belong into the simplified issue space. I'll talk to you about that in a second. But our underwriting is straightforward. Simplified issue means that we are going to rely on the application you put together as well, along with your client, along with some different data streams, right? We use the MIB, every carrier utilizes them. IntelliScript, everybody utilizes them, and we have 2 or 3 other ones that are proprietary to Mutual of Omaha that we utilize as well. With that, we're going to make a determination of, is this person fit for simplified issue? Simplified issue, your clients are going to fit into this box of, hey, they are relatively healthy. You don't have to be super healthy. I'm not looking for athletes here. We'll deal with some health issues, but do they fit in this box and do they qualify for it? Easy enough. Now, if they do, and the majority of people out there do qualify for simplified issue, what I will tell you is that there is no blood draw, no urinalysis, none of that. There's no paramed involved in our simplified issue at all, ever. And we're never going to refer to them again. It just doesn't work that way with us. They're either going to fit in this simplified issue format or they're not. Now, if you do your homework ahead of time, the majority of the folks are going to work out okay for you. And I'll talk about it a little bit later. We even have a pre-qualification system built into the application process, which will tell you with a very high accuracy rating of whether or not your client's going to qualify for a given product. That's super important. You're literally pre-qualifying them before you ever send in an application, so you know whether or not you should even be sending in an app. Okay, that's important for you. Here's the core products for a simplified issue: Children's Whole Life, IUL Express, Term Life Express, Living Promise. Living Promise is our final expense. Those are the 4 core life products. And then on the far right there, you have Guaranteed Advantage. Guaranteed Advantage is our accidental death policy. Okay, the accidental death policy is kind of your backstop for when you have clients who are unhealthy and they can't get insurance any other way. Accidental death is a great one, right? Super easy. IUL Express, again, guys, many of you don't sell IULs because you think they're complicated, right? Agents make them complicated, right? They're not. If you can't explain an IUL in 3 sentences, stop what you're doing, rethink it, right? It is not that complicated. We have a tendency in this industry to think that we need to educate our clients, right? Stop doing that. That is not your job. Your job is not to turn them into insurance professionals. Your job is to make them financially literate and understand why the products you're recommending make sense for them and what problems that they mentioned to you it solves. Your job is not to tell them the inner workings of an IUL. Most people don't understand them anyway and can't explain them. And the other part of it is, if you explain these things too deep for a client, I'm not saying withhold information. What I'm saying is, if you start off at that point where you're over explaining things, it sounds too complex. What do clients think when they hear something that's complicated? Money. It's going to cost too much. Every client thinks that way. Right? It's absolutely true. IULs. Here's how every single IUL on the market works. And you can use this to explain it to any of your clients. An IUL is a form of permanent insurance. Every time you make a premium payment, a portion goes toward the death benefit, the other portion goes to an accumulation bucket that you can use at some point, should you choose to. Stop talking. That's it. The questions will come from that, right? The questions will come, well, what do you mean that they can use it? Well, you can take tax advantage loans after this, and get into a pinch, you need some emergency money, or if you want to utilize this to fund something, you potentially have that available to you should you choose to. But at its core, this is still life insurance, right? It just has the added benefit of this extra thing. That's all you got to do. You don't need to get into, well, there's different participation strategies and crediting point to point, and you have the 100% participation rate, the 85% participation rate with a high cap, the 65% with a low cap, the Bank of America risk index category. Nobody cares about that. I don't care about it. Believe me, when I hear that, I go, whatever. I'll explain to you the rationale behind some of that here in a little bit, but ideally, lead off with your clients for the reason you're talking about it. One of the best questions you can ask your clients is, hey, what is it you want your insurance to do for you? Now, some of them will have heard about an IUL. Some of them will, whatever. They're going to ask you about term, right? They're going to ask you about term insurance, most likely because Dave Ramsey, and everybody knows Dave Ramsey, shouts it from the rooftops, buy term and invest the rest. Well, Ramsey is an okay guy at what he does. I'm not going to argue with him about that. But what I can say is that he doesn't know your clients. For him to make a blanket statement like that of, hey, buy term and invest the rest, is kind of silly because he doesn't know your client's situation. So maybe there's a spot that it makes sense to be talking to your clients about some permanent insurance, right? And without a doubt, there typically is. This diagram shows you a little bit about what I just said and how it works. Again, I can't emphasize this. When you're talking to a client, you keep it very simple with this, right? Just like it says here, client pays a premium. Portion of it goes toward the death benefit. The other portion goes toward building an accumulation value, all right? How does the accumulation value earn interest? It can be done on a fixed or currently declared rate, which is 2%, or different indexing crediting strategies. What I will tell you, an IUL Express is a simplified issue. It's an IUL built within a simplified issue chassis. This is not the place for you to customize an IUL, right? Can you? Yeah, you sure can. Should you? Probably not. Probably not. The reason why is that this is made for very simplified issue. If the goal is massive accumulation, then maybe you should be looking at fully underwritten, right? Because if you have somebody who's super healthy, then they can take advantage of some crediting we would give for super healthy people. But if you have somebody who wants something done quick and fast and easy and done, an IUL built in a simplified issue chassis, and you use something called Easy Solve. Easy Solve creates a balanced policy where it's not aggressive in accumulation and all these kinds of things. Don't get too wrapped up into that at this point. But it creates a balanced policy, meaning that the different crediting strategies are selected and you don't have to do an illustration. This is the part that a lot of producers hate. Producers hate having to go into WinFlex and create an illustration. Not a lot of people are very good at it. A lot of people don't like monkeying around with it, so don't. Simplified issue means simplified for your clients, but also means simplified for you. So don't monkey around with the stuff that you don't need to. This is meant to be simple. Keep it that way. We'll talk more about the nuances of an IUL here in a minute. But again, if I'm you guys and I want to use an IUL Express, I am keeping it as simple as possible. The vast majority of these get issued within 24 to 48 hours, right? Something like 84, 86% get issued on the spot. That is insanely rare, right? Again, we were the first ones to ever have a simplified issue IUL, so we're good at it and we know what we're doing with it. Here's what it looks like. IUL Express issue ages are from 18 to 75. You have non-tobacco and tobacco standard ratings. That's it. Again, this is not the place for you to, get preferred plus and table rated and all these other things. It's literally, they're going to get standard tobacco or standard non-tobacco. Face amounts. You'll see there's differing face amounts. From the ages of 18 to 50, they can get from 25,000 to 300,000. 51 to 60, it's 25,000 to 250. And ages 61 to 75, it's 25,000 to 150. Again, standard non-tobacco and standard tobacco. On the far right, you'll see the indexing strategies. S&P 100% participation, S&P higher participation, S&P lower participation, and the Bank of America US Agility Index. I don't care about any of that. Because here's why. In this scenario within the IUL Express, those four crediting strategies perform within a quarter to a half point of each other. So if you're in this chassis, I'm telling you, unless you have a compelling reason to do something different and customize this, you pick Easy Solve, let us create the illustration for you. We apply your client's signatures to it. You don't have to chase any of that down. Right? It'll automatically select the S&P 100% participation, which is what you want in this scenario anyway, and be done with it. We'll talk a little bit more about the strategies here in a second, but keep it simple on yourself. It's simple for a reason. Why the age bands? All right, I get that question a lot. Again, thinking about what simplified issue is. Simplified issue, we have much less information to work with. We are literally relying on the MIB, Medical Information Bureau. Every carrier out there utilizes that. And Telescript, that's another one. It's a pharmacy check and a couple other things. And then 3 different proprietary data sources that we also use, right? The majority of that, when you compare it to how you and your client fill out the application, will tell us whether or not this is something we're going to do, all right? The different age bands are there because we know, just like you do, the older you get, the little more risky it is. So we have to balance out how we do an IUL. Again, if you need above 300,000 for your clients, go look at a fully underwritten one. Fully underwritten is not hard, right? But you have to set different expectations with your clients that, hey, this is going to take a little bit. You are going to go get a physical. And if you've had some health issues in the past, we're going to have to chase down some attending physician statements. Not a big deal. I'm 57 years old. I literally did one on me and my wife a year ago, and we got it done in 10 days. Not a big deal. The hang up with fully underwritten is clients dragging their feet on getting the physical and then not being proactive with you, the agent, on getting information the carrier needs. I don't know if you guys know this or not. You'll probably realize that after I say it, but every time you make a sale, you're making 3, right? You're making 1 to your client. That's the obvious one. One to yourself, is this the right thing I should be doing? And one to the carrier. Hey, Mr. and Mrs. Mutual of Omaha, this is why you want to write this risk. Simplified issue, it's based on data and the application, fully underwritten. You have some maneuvering room in there. So if you have somebody with a lot of health issues, or maybe they're looking for higher death benefit amounts, go do the fully underwritten. But in general, a significant portion of the population merits looking at an IUL Express because it's easy, solves a lot of problems, and you're going to see there are several instances where you should be looking at this alongside our final expense. And IUL Express is a great place to utilize the power of an IUL with the concept of final expense. All right. Underwriting. Guys, I already kind of chatted about it a little bit. It's pretty easy. Here's the things we're going to look at within the different age bands. Everyone, we're going to look at the build chart. I would encourage you. mutualofomaha.com/simple. mutualofomaha.com/simple. Go to that website. There's no login required. It's everything about our simplified issue portfolio, including historical crediting and all that other fun stuff within the IULs. In the underwriting guide, and there are a couple other guides on there. There's an express kind of quick check sheet for you. There's also one in there that is a pharmaceutical or prescription drug checklist. It'll tell you, hey, if your client takes any of these medications, they are not eligible for simplified issue, right? Go look at that. You guys do a better job because you have a lot of focus within the health space, right? Medicare Supplement, Medicare Advantage, things like that. So you're really good at that, and you do better than most in asking health questions. What I will tell you is continue to do that. When you're working with life products in general, you should always ask your client, hey, I need to know some health information from you. We're going to get into your health history. I need to know everything, even if you think it doesn't matter, and even if you think that it's insignificant, or maybe it happened so long ago that it's not a big deal. I need to know everything, so I'm putting the right options in front of you. If you say that, then no matter what happens, even if they get declined, you can come back to your client and go, hey guys, what did we miss? Create a sense of ownership with your clients so they have a part in the process and they own that. That's an important thing for you to have. Again, that's your get out of jail free. I used to be terrified of going back to a client with a declination, right? That's like the worst thing. It's like, man, I literally made the insurance company break up with you, right? I mean, it's absolutely that. But if you say that statement and set the expectations early that you need to know everything, doesn't matter what happens next, right? Build chart, MIB, pharmaceutical check. We're going to do that on all the age bands. Motor vehicle, yeah, we're going to do that on some of them, depending on the age brackets. We typically don't do it over the ages of 61. When are most people dangerous somewhat with motor vehicles? Yeah, 18 to 35. I would probably shove that up a little bit higher, but yeah, it's males 18 to 35. Yeah, do we check the females too? Sure we do. But I mean, look, guys are stupid. We take dumb chances. And when you're 18 and 19, good Lord. Yeah, Kurt at 19, not a client I would really want. Kurt at 35, yeah, he's calmed down a little bit. I would probably chat with him. But anyway, we have the ability to look at motor vehicles. We will pull that. I'm looking for the heavy duty stuff at this point, right? Willful reckless driving, multiple DUIs, dumb stuff, speeding tickets and that I could care less about. But when you have people who have multiple DUIs, that's a high indicator that they have some kind of substance abuse problem. If you have 2 or more, the likelihood of you having a substance abuse problem is somewhere in the 80 percentile range, even higher. And especially if you're over the age of 21 or 22, sorry. Yeah, it tends to go up very high. So again, hey, we're going to reserve the right to do that anytime we want to. Phone interview. Guys, I can't press this enough, right? As you're going through the application and you submit it, if it ever comes back, hey, this case has been referred to underwriting for a phone interview. You need to have your client call this number. It is not a big deal. This is so simple. Sometimes people get really wound up about it, and I don't understand this, but you can set the expectation with your client of, hey, sometimes the carrier is going to want to talk to you, right? Just to make sure they understand the data and they understand what they're seeing here. It's not a big deal. They may review the health questions with you. Again, not a big deal. Set the expectations with your client. Why would we do this? Typically, we're going to do this if we're getting conflicting information, right? So if your client says that, nope, they don't have any diabetes, never been diagnosed with that, and then we get a diagnosis code from the MIB, or maybe we get something, a weird scenario that, hey, we do a pharmacy check and we found out they've been prescribed insulin, but there's no indicator of them ever having diabetes. We're going to want to talk about that. Again, Going back to my three sale philosophy, right? One to your client, one to yourself, one to the carrier. Well, this is how you help Mutual of Omaha understand the client and why it's a good risk. What I will tell you is if you have a client referred to underwriting for a phone interview, that means we want to write it. We want to write it. We just need to understand it better, right? That's literally all this is. That's a good thing. If something gets referred to a phone interview, that means we want to understand it and we want to write it. The likelihood of us doing it, if your client just picks up the phone and makes that simple phone call, somewhere around 90%, it's very high. It's extremely high. Because if we didn't do that, we would just decline it and be done with it, right? So if they get sent on a phone interview, it's actually a good thing. And it's a healthy thing. Protects your client, protects you, protects us. It's all good. Here's the reason why you utilize an easy solve. And here's the reason why IULs are so powerful, all right? Remember I told you in the very beginning of this, you're going to hear me say this several times until it's drilled into your brain. How an IUL works is it's a form of permanent insurance that every time your client makes a premium payment, a portion goes toward the death benefit, the other portion goes toward an accumulation bucket. Okay, how does the accumulation bucket function? This is where people make the mistake. They start mentioning the S&P 500 and all these other indices. The money that your client is going to accumulate is not in the stock market at all, ever. It's not in there, right? That's not how it works. We use the S&P 500 as a benchmark, meaning however that performs, we can determine what kind of crediting we're going to do. What does this allow us to do? It allows us to protect your client in the downturns, right? So say if there's a negative performance in the S&P 500, I'll give you an example. Take a look here, 2008, S&P went down negative 38%. I remember that. My 401k took a big old chunk dive then. It was horrible. Made me nervous, but I also understand how things work and I'm in it for the long haul. If your client had an IUL then, they wouldn't have taken a 38% hit. We just wouldn't have credited them anything that year, right? In the years where it goes up, we will credit them accordingly. If you look at this little table, what this is painting the picture of the 1 year participation at a cap of 9.25%. So if we look at 2008, when it went down 38%, what did we do? We didn't credit them anything. The next year, or the year previous, when it went up 3.53%, what did we do there? Well, that's what we credited them. 2009, it went up 23.45%. What did we do? We credited them 9.25. Why did we only credit them 9.25? Because Mutual of Omaha as a company took the hit here of almost 40%. So your clients get to participate in all the good stuff that happens within the market to protect it from the downside, right? It's called zero's your hero. You guys have probably heard that term before. That's exactly what that means. They get the benefit of the performance and the downside protection, which is exactly what you should want. All right. That cap, 9.25, that was based on something I did a few months ago. Our cap for the 100% participation now is at like 10. So it's actually really good because it allows Mutual of Omaha to do our internal financing activities and at the same time give a decent rate of return to the clients, right? To keep these policies active and to help them accumulate some significant value. All right. If you utilize the Easy Solve, again, as you're filling out the application, there's a little box that says select Easy Solve. This is what the Easy Solve does. All right. It allows for a guarantee of that policy to be enforced for a minimum of 20 years or to age 80. If the market never gets credited anything ever, that's the minimum of how it will perform. If it performs like it should and like it has in the past, it'll roll out to 120. All right. So how is it that I'm telling you that it's guaranteed for 20 years or to up to age 80, regardless of the S&P, but this is a form of permanent insurance? Well, it is a form of permanent insurance because it's designed to utilize the traditional crediting of the S&P 500 in a way that allows it to last much longer. But again, if the world ends and the S&P 500 goes in the tank for the next 20 years, cool. It's going to last at least that long. That's some serious protection. And it's something worth noting. Living benefits. That is a term, been in the industry for quite some time. Just about every simplified issue carrier out there now has it. We were the first to have living benefits. Here's how living benefits work. Your clients have the ability to access a significant portion of their death benefit should they have terminal, critical, or chronic illnesses, right? Typically up to 80%. We're always going to reserve 20%. So if and when they do end up passing away, we're always going to be able to do that. But keep in mind, that is important for your clients. Living benefits are a big deal. Competitive cash accumulation, yeah, we already talked about that. There's a reason that we do what we do, and Mutual of Omaha is pretty good at it. And again, we were the first to come out with that. So do this for yourselves. If you don't like going in, and a lot of agents are uneasy about using WinFlex to do all these case designs and all this baloney, you can either call me, or you can call Cindy, or you can call our sales support. Sales support is 1-800-693-6083. You can utilize them. But what I will tell you is, if you're putting somebody into a simplified issue chassis, why are you monkeying around with that? Don't. Easy solve. Select easy solve. The system will automatically create the illustration for you. It will apply your client's signatures to it, so you don't have to do any of that stuff, right? It creates a balanced policy, meaning that it's not aggressive one way or the other, because IULs you can design, and you guys have probably heard the term overfunding and all this great stuff. Can you do it here within this chassis? Yeah, you sure can. Should you? Probably not. I wouldn't. 9 times out of 10, I'm choosing easy solve because I want this simple. I want it done as quick as possible, and I want a balanced approach. That's why you choose an IUL Express. If you want higher death benefits, or if you want to max out accumulation and all this other stuff, maybe look at a fully underwritten. Again, can you do some customization with this? All day. And if you have a case that you want to talk to about, again, you have some insanely talented managers there, but also reach out to Cindy and I. We can help you with the whys behind it. But 99 times out of 100, every IUL Express that I've seen should be done with an easy solve. That's why we do it. Here's a concept for you I want you to keep in mind. We have, in one of our simplified issue products, is Living Promise. It's our final expense. It's a typical whole life policy, right? And what this is doing is it's showing you the comparison between doing a $50,000 death benefit with Living Promise and the same death benefit with IUL with the easy solve. So looking at the little chart, male, non-tobacco, age 50, Living Promise for a $50,000 death benefit is $140.58 for Living Promise. Go over to the center column, IUL Express Easy Solve, $69.85. That's a 50% premium savings for your client, right? Why is that? Well, Living Promise, we have to guarantee that in a way, which makes it a little bit more expensive. The IUL, we're utilizing the way we benchmark against the S&P 500 to balance out the approach. That way we're able to give more of a death benefit for like money. So again, $50,000 death benefit in this scenario, Living Promise, it'd be $140.58. IUL Easy Solve, $69.85. It's a good option for, especially for clients who maybe are a little bit more budget conscious, for lack of a better term, or who maybe just like the idea of letting the policy work a little bit more for them. And that's what an IUL does. It gives you options. And again, the other cool part of it is, can you borrow against an IUL tax advantage? Yeah, sure you can. All IULs. What I would tell you is, and this is part of the misinformation that's out there. And I literally just heard this the other day when my daughter showed me this dumb video on TikTok. And it said, yeah, you can put some money into an IUL and start accessing the death benefit immediately. No, you can't. And you'd be stupid to do that. That's not a thing. You shouldn't touch that money for at least 10 years. And here's why. Every company charges money on the loans, whether they're standard loans or index loans. Every single company charges that, right? After the 10-year period, they typically get less. And I'll give you an example. For us, if you start taking money out from years 1 to 10, we're going to charge you 4%, and then we're going to give you 2% back. So it's a 2% loan on standard loan. If you wait till after 10 years, it's a wash loan. We're going to charge you 2 and credit you 2. So there's no reason. And again, this is not a get-rich-quick thing. That's not what this is. This is life insurance with the added benefit of some accumulation. Now let's take a look at the male non-tobacco age 60. This gets even better, guys. Obviously, as you get older, the cost of insurance goes up. But look what happens here. $50,000 death benefit for that male age 60. $205.99 for the Living Promise. $128.87 for the IUL Express. Again, allowing the policy to function in a way that the accumulation helps balance out some of this better. That's a great option, right? Age 70. This is where things start to get a little pricey, right? And I guarantee you've had clients that are in their 70s and mid 70s. And here's the other thing. What happens at the age of 70? Yeah, a lifetime of bad behavior and other health problems show up, right? So you got to be careful at that point. But anyway, age 70, a $50,000 death benefit for our living promise is $360.23. An IUL Easy Solve, $218. It's about $140 difference between the two. That's awesome, right? And this is just telling you that if this illustrated rate for this to work correctly was 5.9, average crediting on our IULs is around 7. So yeah, it's super easy. Here's the other cool thing. Looking at a true comparison of dollar for dollar with a living promise, all right? Same kind of scenario, male, age 60, standard, non-tobacco, $50,000 death benefit. Living promise is $205.99. Again, death benefit's 50 grand. An IUL Express for the same premium, $205.99, gets you a $70,000 death benefit, right? Because again, we're allowing the internal functions of the IUL to compensate for how it's working. So it gives you a greater death benefit, right? Pretty straightforward stuff, but that's the power of an IUL. A lot of people don't understand it. And again, going back to how it works. Hey, here's how it works. Every time you make a premium payment, portion goes to the death benefit, the other portion goes to an accumulation bucket that allows you to do a lot of things. What does it allow you to do? Well, allows you to get a bigger death benefit because the internal functions of it allow for this kind of credit, right? It's an important thing. And that's a good concept. Again, and if you're competing, do this. Next time you run across, especially new clients. Hey, what planning have you done around final expenses? If they tell you they have a final expense policy with somebody, look at it with them. Look at it with them and say, hey, you know what? You might want to look at this. That's a way to win over a client, because I guarantee you the majority of people out there aren't utilizing an IUL Express to talk about taking the place of final expenses, right? Guys, I don't know if you've noticed in the past 16 months, 18 months, 5 different carriers have left the final expense market. Why? Because they did it wrong to begin with. They were doing ridiculous pricing, and they were also accepting risks they probably shouldn't. I know 2 of them went into receivership. The other 3 just don't sell the product anymore. Okay, fine. We're not one of those. We're a relatively conservative carrier, and we're that way for a reason, because if we have a product out in the market, we want it to stick. I don't know if you guys have ever experienced this. I had it happen to me before, where I sold a policy to a client and I had to go back a couple of years later and work with them on something different. And they asked me about this policy, and I had to tell them, hey, that carrier actually isn't around anymore. That's a horrible conversation, because then your client's looking at you like, do you even know what you're doing? And then you get to explain, well, hey, sometimes in insurance, this happens, blah, blah, blah. Yeah, we're not like that. You're not going to run into that problem with us. So again, use the IUL Express potentially as an alternative to final expenses. Again, here's the reason. We kind of, mentioned this, added flexibility, right? There's a lot of cool stuff that you can do with an IUL Express. Higher death benefit, 20-year death benefit guarantee, even if the market doesn't do anything. That's the minimum, right? If the market performs like it should, it's going to last till 120, right? Purchase the same death benefit with less premium, purchase higher death benefit with the same premium when you compare it to a living promise or final expense policy. Short pay opportunities. What does that mean? IULs work this way, right? Say you're talking to somebody who's 40 years old, and they tell you, you know what? When I retire, I don't want to make any more premium payments. Cool. Can you do that with an IUL? Yes, you can. You can design this in such a way that if you have somebody who's 40 years old and they tell you they're going to retire at 67, cool. Get with sales support, get with me, get with Cindy, get with your managers there. There's a way to design these where, hey, okay, I'm just going to make payments for 27 years, and when I retire, I'm done. I'll have a paid up policy. Can you do that? You betcha. You betcha you can. There's always opportunities to do that. But again, that's the powerful part of an IUL. The crediting allows a lot of different options. Policy review opportunities. What the heck am I talking about here? When you sell, not just IULs, I would say, but honestly, any policy, you need to put your client in the driver's seat. Again, you give them a little ownership of the process. The more ownership of the process you give to your client, then they become a true partner and not just somebody you call on every now and then when you think of a great sales idea, right? Give them some ownership in this. So what you tell your clients, and I used to tell this all my clients all the time, and I would tell them, and I use these words, hey, what I typically do with my friends and family as well as my clients is I'm going to meet with you once a year to review your policies, make sure the beneficiaries are set up correctly, and make sure it's doing what we wanted it to do for you. The minimum I do is that once a year. Tell me, I have some people that meet with me every quarter. How often do you want to meet? Do not give them the opportunity to say, yeah, I don't need to meet with you again. Baloney. You're going to meet with me every year. Whether it's a quick phone call or I drove out to your house or whatever, don't care. You're going to get that. It allows you to uncover opportunities, right? And then you can also review, hey, IUL is doing this. This is what it's looking like right now. Cool, right? Oh, by the way, just had a kid, just bought a house, new job, wife got a job, husband got a job, whatever, right? There's all kinds of opportunities that show up in people's lives. And I'll give you an example, right? I had gotten out of the Marines in 1996, started my own construction company, did that for a couple of years. Somebody should have grabbed a hold of me earlier. You would have had the opportunity to see me grow that company to a group, sell it off to somebody else, along with 3 other partners. You would have had the opportunity to see me start another company in the insurance field, but you would have the opportunity for me to introduce you to my 6 employees at the beginning and then 12 when I sold it off later. And oh, by the way, what happened along the way? I purchased another company, right? So with me, I'm just using me as an example. It's not that I did anything special, and these companies weren't that damn hard to create. You guys are business owners yourself. But along the way, there are so many opportunities. What else happened? I had a daughter. What else happened? She married a okay son-in-law, I guess. I can't beat him up too bad because I mean he's a nice enough guy. And what happened? They gave me 2 grandkids. So seriously, and talk to your clients, right? Every one of your clients. Let me show you this. You'll like this. This is hilarious. And I do this every time. Look what's on my phone. Look at the knuckleheads. That's my grandkids. Every client, if they have a heart, has a picture of their family on their phone. And I bet you do too, right? So why aren't we asking them about that and presenting them these different ideas, right? So ask them about that. Doing these policy reviews, not only are they super important with IULs just to make sure it's doing what you wanted it to do and uncovering any opportunities, but it gives you those opportunities. So again, include your client in the process of, hey, I'm going to meet with you once a year. If you want to meet more, cool. Tell me how often and when, right? So give them some opportunities with that. mutualomaha.com/simple. Guys, all our simplified issue products, this requires no login. Most of you have access to our sales professional access, which is mutualomaha.com/broker. You have to register for that and you'll get a login and all that. If you haven't, it's easy. Just go there and go on the upper right-hand side and register for it. But this one, you don't need a login. It's just for our simplified issue products. So it houses our Term Life Express, IUL Express, Living Promise, Children's Whole Life, and Guaranteed Advantage, which again is our accidental death policy. You can go in there and get marketing materials. You can get more education about IULs. There's even a client-facing IUL Express video, 6 minutes long, right? So much cool stuff in here. There's a highlight sheet. There's a prescription drug checklist. There's all that stuff. A lot of really good stuff for you to learn from. And again, it helps you. There's a reason we titled it Life Simplified, right? We want to help you keep it simple. Keep it simple for you. Keep it simple for your clients, right? It's not the place to get complicated. Training videos, right? We got brochures, we got highlight sheets, process guides, product guides, we got all that stuff there. I'd encourage you guys, mutualomaha.com/simple, go look at it. Here's the 2 videos. Top one's client facing, 6 minutes. Bottom one's producer training video, 10 minutes, right? So if you have a client that wants to get more into the nuts and bolts, create that partnership with them. Hey, I work with Mutual Omaha a lot. What have you heard about them? They're going to recognize Wild Kingdom. They're going to recognize all this stuff that Mutual Omaha does. Introduce them to the videos. Shared experiences and commonality of purpose create a tighter bond with your client. It creates a higher level of trust, which everybody knows that goes back to the old trustworthy selling and Dale Carnegie model. Higher trust, higher likelihood of them doing business with you, right? Utilize those. Those are good things, right? If you don't have this, I'm telling you, get it now. Quotes for sales professionals, right? Mutual Omaha quotes for sales professionals on your phone. All of our simplified issue products plus our fully underwritten term life answers is on there. You can literally do a quote, do a screenshot, send it to your client. Hey, this is what this looks like. Doesn't get any easier, right? You don't have to screw around with illustrations. You don't have to do that. Taking a screenshot and getting the conversation started, right, shows that not only do you have a process in place, it shows that you have a purpose and a method to what you do, and you make it easy for your client to interact with you. Use that, man. I kid you not. I wish that was around 30 years ago. I would been retired. I mean, seriously, it's so good. It just makes things a lot easier for you guys. So go to, for those of you that got the Androids, go to the Google Play thing. And then for those of you that got iPhones, go to the App Store. Mutual of Omaha quotes for sales professionals. Here's something I want to tell you. This is important. This is part of our application process. Anytime you're applying for any of, or not any of them, for our IUL Express, Term Life Express, or Living Promise, which is our final expense, we have a pre-approval indicator system. It's a pre-qualification process. It literally will tell you whether or not you should even submit an application. If you're applying for Term Life Express or IUL Express, as you're typing it in, this is not a separate system. It's actually it's built into the application process. It will tell you your client is trending favorably or your client is trending unfavorably. What I will tell you is if it says trending not favorable, stop what you're doing. Do not submit this. 100% will be declined without fail. I'm telling you, if it's red, it's dead. Do not do it. That's an opportunity for you to go back to your client and go, hey, as I'm putting this together, there are some things obviously coming up about your health background. What haven't we talked about, right? That's not a place for you to just bail on your client. It's a place for you to increase the conversation, right? Because maybe they have some health issues, or maybe it's something along these lines. And if you ever hear this, you got to talk to your client about it. Oh yeah, I was prescribed that a long time ago, but I decided not to take it. All right, that's an even bigger thing, all right? Clients that ignore the advice of medical professionals make all insurance companies nervous, right? Not just mutual, all of them, right? So if it says favorable, go ahead on with the application, right? If it says trending not favorable, stop what you're doing. It's a little bit different for how it works with Living Promise, all right? Living Promise, we have two levels in there. We have level and then we have graded. Level means they're eligible for the death benefit from day one. Graded means there's something in their health history that we don't dig. So if they pass away within the first 2 years, we're going to return all their premiums plus 10%. If they pass away after that 2-year period, then they'll get the full death benefit, right? That's significant because we have the level in graded for a reason. If we didn't have the graded, we'd decline a lot more people. But we also had to mitigate that risk by giving it kind of a pause. So what do? We gave them a 2-year pause that matches the contestability period. Not a big deal, right? For your clients that have a bit of health issues and that shows up, it's actually a good thing. Not favorable, again, if it says not favorable, do not submit it. Don't. Here's something I will tell you, right? Even if you get the favorable, and this is highly accurate, like 92, 94%, sometimes if you have favorable, can it be declined? Yes. Here's how that happens. At the end of all this, before you ever submit it, if it says favorable, obviously go ahead and continue on with your application. Before you hit submit, at the end of the application process, there's a little PDF button in the upper right-hand corner of your application process. Make sure you click on that and review the actual forms that is going to the insurance company. Do this with every carrier. I don't care who it is. You need to review the forms that the underwriter or underwriters are going to see, right? In those forms, it will literally say, if your client answered yes on questions 2 through 7, they are not eligible for coverage. By law, there are certain bits of information that we can't pull until you hit submit. But if it says trending not favorably and you get out of it, it doesn't count against your placement at all. It's like it never happened, right? So it's highly accurate. It helps you understand the process, helps you be able to communicate with your client that, hey, this is how this is working. This is what we're seeing. Looks decent. So several steps along the way where I've given you some verbiage to protect yourself and also make the conversation and expectations for your clients easier, but also use this. Critically important. Guys, that's me and Cindy, right? I am the broker sales director. There's my direct phone number. There's my direct email. There's Cindy's direct number. There's Cindy's direct email. If you have additional questions, or maybe you have a client that you're not sure if it makes sense to do an IUL Express or any other product, doesn't really matter. Please give us a call. I mean, again, you guys have insanely talented managers at Eldercare. Utilize them. But if you want to talk to the actual carrier and get some help with maybe some cases on it, because maybe you have a case that you should be doing something else with. Cool. Let's talk about it. I do that kind of stuff all the time.
Thank you, Kurt. I really, really appreciate the in detail information on this product. A lot of people are tuned in, haven't left. Not a lot of questions, which mean they love the information. I really enjoyed it. And like I said, again, definitely appreciate it, man. So one of the takeaways that I would love to say is how you speak about keeping it simple. I think a lot of times when I talk to agents, when we start talking about the UL side, the IUL side, and we get into all these different things, a lot of questions that, kind of come about as one of those things for me. It's like, I don't think the people are going to ask that question. So when you talk about keeping it super simple, I think that's a really, really, really good point when we talk about this and being able to save you guys. So again, let's have that conversation. I'll let you guys rip. Kurt, is there anything you want to add to that?
No, and French, just like you said, there's keep it simple, right? When your clients hear complexity, they think cost. And here's the other thing. View your client as an onion, right? You peel that outer layer, right? The outer layer. As the questions come, that's when you get deeper and deeper and deeper into the mechanics. Don't lead with answers. Let them lead with questions. That's exactly what you want to do. And Brett said it just right.
Absolutely. I love that onion metaphor. That's really good. It's good. All right, guys. So I appreciate it. I'll be looking forward to talking to you guys, of course. Have a great Tuesday. And again, Kurt, thank you, man. We appreciate it.
Awesome. Thanks, Brent. Have a good day, guys.
Absolutely. Y'all have a good one.